topic, and this is something that's goes with what we're doing and what we've been doing. So tonight we want to talk about like diversifying our portfolios, or like our wealth. Like, what does that look like?
Mhm.
You know, we've talked about, you know, with a lot of you, some of the things that we do individually. A lot of you guys know we own real estate, and we have a consulting business, and, you know, I work a full-time job, you know. So we're really diversified intentionally. We diversify intentionally because we never know what's going to happen with the economy. We never know what's going to happen with our employer. You know, anything can happen. So it's important that we're diversified on all fronts when it comes to our investing, our savings,
Mhm.
starting businesses, you know, our employers, everything.
Yeah.
So tonight we want to really dive into what precious metals looks like, the reason why it's important as that's to be a part of your portfolio. If you've never actually purchased precious metals before, talking about gold and silver mainly. And there's, you know, there's copper, uranium, and a lot of these other ones that you can buy through stock exchanges and ETF funds and things like that. But we're talking tonight literally the purpose of, like, why would you buy a physical gold coin? Why would you buy a silver coin? What is the purpose of that? So that's where we're going to go with this tonight, because we really want to show you like the power of preserving your wealth through like precious metals and through defeating inflation, basically. Because you guys, I mean, you guys have all experienced this right now. Inflation is rampant. We hear it on the news, we see it, we're watching it at the gas station, the
Mhm.
supermarkets, you know, house prices are out of control. It's a real problem.
Yeah.
So what can the average person do to fight against this? Like, as us being like average, middle class, what can we do to keep what we have and actually be able to be in a better position in 5, 10 years from now?
Mhm.
So we have to really think strategically about the things that we purchase, the things we invest in now,
Mhm.
about our savings and how we save things, how
Yes.
we put wealth in. Do you want to say something, Deanna?
I was gonna say that when you were talking about diversifying, right? So some of our previous sessions have been about business. So we believe on having a business. You could have your W-2 job. Maybe it is because you purchased a property and rent it. It could be, so there's many different opportunities. And when we talk about diversifying, like Chad mentioned before, it is an opportunity to manage risk, right? If we only have income coming through your W-2 job and then you lose your job, what we've seen is that, I mean, it's crisis, right? Because that was the only source of income. But if we, little by little, we're not saying we're going to invest a whole lot, right? If we start little by little investing in different opportunities, then we will start diversifying ourselves. And in 10 years, you will not be where you're at now, even if it's $10, right? So we talked about the marketing plan because that was so related to building a business. And then today, like Chad was sharing, we want to talk about precious metals. And it is something that we've done. So we're coming from our experience. We do want to say at the same time, right? We're not experts, we're just gathering data and sharing knowledge. So it's not like this is the only thing that we are focusing on, or we're experts on gold and silver and precious metals, but we do want to share what we've learned and even where we've learned it from.
Yeah. So that being said, we have what we're going to do is get into, before we're going to show you some spreadsheets and some charts and things like that. But I
Mhm.
want to explain for those of you guys do not know, just how many of you guys know much about gold at all? Like why we have gold, what happened with the gold standard, Are you guys familiar with that at all? Do you guys know about, I'm just throwing out some different things just to get you thinking about Bretton Woods and why the United States has did different things, like through a certain period of time, they took made it illegal for American citizens to actually hold gold.
Why don't you go ahead, give us a 2 or 3 minutes? Yeah.
Yeah. So
That's-
let's just start with what happened. So back in 1933, during the Great Depression, President Roosevelt actually took the dollar off of the gold standard. So what does that mean? That means that before 1933, gold was the standard around the world, and the United States was like the safe haven for the world, basically, for the dollar. So what would happen is if somebody, say like China, bought goods and services from the United States, and then, you know, we gave them, you know, we paid for them with dollar, or we bought goods and services from China, and we paid with them with American dollars, you know, US currency. Well, China could come back to the United States and say, hey, I want to take this $1 million in US currency, and I want you to give me $1 million in gold coins or gold bars. So, and it was always backed, the currency was very strong because it was always backed by gold, and gold is the same price no matter where you are in the entire world. Spot price for gold is spot price everywhere. There's no like negotiation and fluctuate. It's just the same price. So, but what happened in 1933 is that we had World War II happen. So, and then as that was happening, the United States economy was just deflating. The economy was going down fast. Like prices were dropping, house prices were dropping, everything was dropping. So you American citizens were scared. Obviously, what happens when you start losing your jobs and everything, you start saving everything you have. So instead of bringing the gold that they had normally to like the banks to change it for dollars to transact with each other in businesses, they were hoarding gold. They were literally keeping the gold because they knew that that's the safest place for their wealth to be at that time. So during this time, this happened, President Roosevelt decided that, listen, we got to stop this, because if we don't stop the economy from deflating, it's going to collapse the United States economy. So only way to stop this was them to stop the trading of gold, basically, for US citizens. So what they did is they said, okay, and on April 5th, 1933, Roosevelt ordered everybody that had gold over $100 in denominations. Now think about this. This is you and me. You're watching the news one night and they say, okay, we need everybody by order. It's a national mandate that you got to bring all your gold to the local bank and you got to exchange it for fiat currency, which is what we're on right now. And that's, you know, that was what we got. You turn your gold in, we're going to give you a dollar bill, and we're going to say your gold is worth this much money. Your dollar bill is worth this much based on the price of gold today. So at that time that he did this, he set the price of gold per ounce. This was on May 1st. So this all happened within the course of a couple months. It was like, hey, everybody's got to turn in their gold tomorrow, you know, basically tomorrow. And we're going to give you $20.67 per ounce. So this is in 1933 going into 1934. So they gave everybody turned in their gold. Well, probably a lot of people didn't turn in their gold, but they were supposed to. Legally, they were supposed to. But they got their dollar bills, their $20.67 for their dollar bills. They took it back to their house, and then that's how they started paying for everything. Now, a year later, the government decided, like, okay, we have to inflate the economy. So right now we're in an area where there's so much inflation going on in our economy. So it's inflated. So now the government's trying to lower inflation. Back then, that was the opposite. They're like, we have to cause inflation. We need prices to go up. So the first thing that they did is they said, hey, we got all this gold from everybody around the United States and around the world. We told everybody turn it in. Now we're going to say the price of it today is $35 an ounce. So instantly, they just made a decision that we're going to take the price from $20 an ounce to $35 an ounce. And it increased the balance sheet of the Federal Reserve by 69%, just overnight like that. So what that did is cause inflation to start to happen. And then once that, after that went for a while, it started to cause problems around the world because people were wanting to redeem their dollar notes or dollar bills for gold, but the United States didn't want to give the gold because people were still hoarding the gold. So what happened is that the US did not have enough gold on their balance sheet to cover all the redeemable notes in the whole world. So they were getting really worried, like, hey, if they find out that we don't have all this gold in storage like we say we do, because, not everybody's turning their stuff in, we got to do something different so we could keep the dollar as the, world currency. So they created what they called the Bretton Woods Agreement. So there's 44 countries got together and they created an agreement based on the United States being like the global, world reserve currency, guaranteed that we'll be able to back $1 for an ounce of gold, that kind of thing, to back it by gold. That was the agreement. Well, fast forward, to where we are now, we all know how that worked out. Inflation kept going up. They continue to give loans, cause more debt, print more money. And so that got out of control again. So what happened is in 1971, President Nixon said, wait a minute, we're done. He's like, we're not backing anything by gold anymore. We just can't, because we don't have, this is not what he said at the time. He said it's still because of the hoarding issue and everything. But at the time in 1971, it was obvious that the United States didn't have the gold in reserves to cover the debts all over the world that they owed gold to. So they basically said, from here on out, there's no more backing US currency with gold. We're taking it temporary. We're going to take it off the standard. We're going to let the currency run free, so we could pay people, and, we'll issue bonds and debt, with bonds, which is a debt, we're going to issue that to people and countries around the world. And this happened because in like the 60s and 70s, the United States began this, really a trade deficit. We're buying more stuff from overseas than we were exporting. So then it caused us trade imbalance. That's why we couldn't redeem the gold, which I know is kind of technical and I don't want to get too much into it, but I just want to give like a little brief history of where this all comes from and why it's so important to know what gold was and why we're at today. So in 1975, the government actually said, okay, we're going to allow US citizens to start buying gold again, where you could hold gold. So what I wanted to do was show you guys from 1975 till today, like the price of gold and what has happened with gold and silver in relation to what's going on in the economy with asset prices, with the dollar price. So I want to show you the power that actually owning this asset class of precious metals could do for your family's wealth into the future for you, and actually help you retain purchasing power in the future. Because look, right now, anything could happen. And you're going to see on this next slide that we're going to pull up, you're going to see what happened over 2020 and to 2023 with the price of some of this stuff. And this is why it's incredibly important for us to all really see a visual of this and get the idea of why we have to do this. It's not even a question of maybe this is a good idea. This is why we have to do it. If we want to stay at the same, just say if we want to stay at the same wealth or income level we are today, if you want to have the car you're driving today, just 20 years down the road, and the house you live in, same size today, 20 years down the road, then there's something you have to do besides just saving physical currency in your bank account.
And
So,
then also when
go
you
ahead.
think about gold, it's known globally. We might have the fiat money. In case of United States, that will be the dollar. If you go to England, that will be the pound. And then, so the value of those fiat, they change, right? Depending on the economy of the country. But something that we know is that gold, it's known anywhere around the world. So yes, there's different ways of purchasing the gold. It could be on coins, 1 ounce, it could be on a bar. I bet all of you have watched a movie where there is a robbery, and the robbery is like they're just stealing bars of gold. Have any one of you seen that on a movie, right? So that's what we're talking about. It is a real thing, and you can own gold. This is not just for the upper class. It is accessible to all of us. And it is something that if you go to any country around the world, they will understand what gold is. They will give a value to gold, even if it's through jewelry. And then we'll talk about that in a few minutes.
Okay. So if you look at the top left corner, this is a gold chart that I pulled going back to 1975 when we were allowed to start purchasing gold again. So you'll see in all right, so you see the chart, and then the one table below, the blue table, you're going to see the price of gold. So in 1975, 1 ounce, oh, that's too big. You had
Too big? Okay.
Yes, right there.
Okay.
All right. So in 1975, 1 ounce of gold was $176. You could buy 1 ounce of gold for $176. 1 ounce of silver was $4.43. Now, what I did is I went to this Fred site, and I looked at the price of houses to give you a relation. Back in 1975, the average median home price was $38,000. So in 1975, if you just wanted to buy like an average house, it would have been $38,000 for that house. Now, if you look to the next column where it says 220 ounces of gold, that's how much gold it would cost you to buy that $38,000 house. It cost you 220 ounces of gold in 1975. Home price in silver would have been 8,758 ounces of silver. And we just have silver as a relation because we're going to talk about that next. Fast forward 10 years, 1985. 1 ounce of gold is now $300. The same now, it costs you $300 to buy the same ounce of gold. Fiat currency, right? That's inflation. Ounce of silver, $6.13. But look at the home price. Home price is over doubled. Now home price is $84,000. So now it takes you 281 ounces of gold to buy the exact same home you would have bought in 1975. Same thing with silver, 13,752 ounces. All right, let's go to like 1995. So 1995, there wasn't within the 10 years there wasn't a big move in gold, $375 for 1 ounce of gold. Silver, $520, or $5.20. It actually came down a little bit. But look at real estate. It went up again, $133,900 for the same house. And it would have cost you, look at this, 357 ounces of gold to buy that same house. So we went from 220 ounces to 357. So there you could see that the price of gold really didn't keep up with the price of real estate at that time. Same thing with the silver on the side, 25,750. Now let's go to 2005. And this is right before the big housing crash and everything happened, the 2008, 2009 crisis. So this is interesting to look at this data this way. So right in 2005, this is when the housing market was booming. It was like everybody's becoming a builder. They're building spec houses. People were you're getting loans for anything. It was crazy right then that you could get a loan. You didn't even have to have a job, basically. Ounce of gold, $427. There again, it didn't really go up a lot, but what was happening at the same time in that time of the market was housing debt was like easy to come by. You could get a loan for anything. So people weren't worried so much about like saving and gold, and they were more worried about, hey, I just want to get the house. I could get it for a really super cheap price and interest rates low, and I don't have to put any money down. So that house would be in 2005. The average house price was $232,500. And it would cost you 544 ounces of gold to buy that same house. So, over double the amount of gold it would cost you per ounce, what it did in 1975. So home silver, same thing, 31,805. Now, look at this. This is incredible. You go to 2010, right after the housing collapse. Look what the price of gold did. As soon as the housing collapse, we had it, the economic crisis, jumped up to, I can't see, $1,135 an ounce. I mean, it almost tripled within, 5 years. Silver, look at what silver did, almost tripled within 5 years, $20.19. Look at the price of homes. Homes went down a little bit, not a lot, from 5 to 222,900. But look at this next one. It was cheaper for you to buy that same house with gold than it was in 1975. You see that? 196 ounces to buy the same house, same size house that you would in 1975. So if you would have held gold this whole time and not like cash in the bank or anything, it would have been actually cheaper for you to buy a house. What is that, like 5 times more than what it was originally? That's the power of preserving wealth through precious metals. Right here is where you see this 196 ounces opposed to the 220 ounces at the very beginning, in 1975. It's incredible. Now go to like 2015, we're through the financial crisis. Things are getting a little bit better. People are starting to invest in the market. Housing prices has jumped up again. An ounce of gold has gone up a little bit, from in 5 years. So it's gone up to $1,207 an ounce. Silver went down a little bit. It's a little bit more volatile than gold, 1566. Home prices, 289,000 is the immediate home price. Now it's going to cost you 239 ounces of gold, which is almost the same as what it was in 1975. So that shows you, again, you could buy a $38,000 house in 1975 or almost a $300,000 in 2015 for almost the exact same amount of money if you would have held gold. So I'm hoping this makes sense. The power of seeing this in the numbers is this incredible. When I was doing this chart earlier, I was looking at this and it just makes you shake your head like, why don't I have everything in gold? So 2020. Look at this. In 2020, which we all know what happened in 2020, the ounce of gold price went up. And when times start getting crazy and people get uncertain about things, price of gold goes up because it's naturally a safe haven. It's a place that's been proven through history to store your wealth. There's data that supports this going back hundreds of years. It hasn't changed. Not to mean it can never change in the future, but up until now, it has never changed. And central banks around the world are buying it up like crazy right now. So that tells you it's probably not going to change if they're doing it. But look at this, though. In 2020, the pandemic happens, price of gold goes up 15.24, silver's up 20. House prices, this is when they started to go up, right? When all this happened, 329,000 for a median home. But look at this next thing, 215 ounces for a $330,000 house. So it's cheaper in 2020 to buy a house for $300,000, almost more than what it was in 1975 if you would just held that gold. It's incredible. Same thing with price in silver, $15,901 or 901 ounces. 2023. Now I was looking at these home prices here and this just blew my mind when I know we all know that prices of houses are going up, but when you actually see what they've gone up, it's crazy. Gold price, $1,870 an ounce. And it's about that right now, a little bit less right now than it was the first of the year. Silver, $22.80 an ounce. Average median home price, $467,000. Almost $500,000 is the median home price right now throughout the entire United States. That's just what the data from the government website showing it is. Still, only 250 ounces of gold to buy that same house. So you can see that gold kind of paces with assets like real estate. Now, this chart over here on the right, just underneath where it says a Fred, that says the dollars in 1907 adjusted for inflation. If you look at that, it's basically showing you what the actual dollar bill has done. This is if you would have just kept dollars in your bank account the whole time and you would have saved it. $1 in 1971 would take, what is it, almost $7.50 in 2023. So it's lost about 86% of its value within that time frame. At the same time, gold has actually maintained its value. And I want to jump right back over here to the other side. I want you to see something. You see this? I was trying to find a car that was made in 1975 and that is still made today. And I found the Toyota Corolla, believe it or not, was made in 1975 and they still make it today. So I took the price of a brand new Corolla in 1975, $13,423, would have cost you 76 ounces of gold to buy that Corolla. Now in 2023, I thought, all right, I'm going to take the most expensive Corolla with all the bells, whistles, all the gadgets, everything. $28,000 was the most expensive one I could find online. It would only taken you 14 ounces of gold. So you could almost buy 4 Corollas for the same amount of gold that you could in 1975. So this shows you, obviously, assets like housing increase. That's really the only asset that increases like that. There's no other assets or no other things that you purchase that I could even think about that increase like house prices do. So that's why I wanted to show you what a car price would look like. So you could buy, it takes you a quarter of the amount of gold to buy even a better vehicle today than what you would in 1975. So just take that into relations to price of gasoline, the food that you buy, the TVs that you have, your furniture, the vacations, all those things. Think about it like the Corolla right there. So having precious metals store your wealth is actually hedging you against inflation, but actually giving you more purchasing power in the future. For those that haven't, if you would just saved your money, if you would have saved that, say you just saved the $38,000 in 1975, it would have lost 86% of its value to today. So you'd almost have nothing in that savings account because the deflation, it wouldn't have bought you hardly anything. I mean, you could barely buy a brand new car right now, not a Corolla, but any other car for $38,000, let alone a house.
Yeah.
So
can you share a little bit? So for example, if you put the 38,000 in savings account, those 38,000 will still be 38,000 since 1975. But if you will have taken the 38,000 and bought gold with it, then those 38,000 that you purchased on gold, we have more value right now.
yeah, exactly. A good way to look at it is here on the left side on the bottom where it says conversion,
Yes.
1971 to dollars.
Yes.
This is a good way to see exactly what Deanna just said right there. So $1 in 1971, in 2021, it would take you $6.69 to buy the exact same item, whatever it is.
Yeah.
$1,000 in 1971 would take you $6,690. Now, you know what hasn't gone up that much over the past, almost 48 years? Wages. Like the average wage, people are not making, in the last 10 years, let's just look in the last 10 years. The average person's wages have not doubled in the last 10 years. They haven't gone up, 30, 40%.
Mhm.
So, and that's why the economy's struggling right now, and people are like fighting to buy food, to pay for. I mean, look at your fuel cost and your heating bills and everything. I mean, heating costs this winter's gone crazy, and that's gone.
Your groceries, right?
Yes, the groceries have gone up. I mean, this is why we have to do something, and this is one of, besides, I mean, you could obviously you could put money in stock market, and if you're very strategic and you're really good at picking stocks, or you good stock investor, they can help you out. But there's always a huge risk, with stocks, because they're subjected to, whatever happens in the economy. If the economy crashes, your portfolio is going down with it.
And
Now
the
here,
company, right? The
yeah, our
company
company
that
goes
holds
out of
the stock.
business, whatever, anything can happen.
Mm-hmm.
So that is, I wanted you guys to see this to really get you thinking about, all right, because most people, when you talk about buying gold and silver, they're like, I don't know if I need it, it's better just to have the money in the bank instead. Some of those different topics, like it's a relic, it doesn't do anything, you can't make any money off of it, all these different things, you hear these arguments. But the reality is, it actually gives you purchasing power in the future that you're not going to have unless you have something like an asset, like a property or gold. Now, it's way easier to buy gold and silver than it is a house right now.
Yeah.
So as you can see, the house prices, you got to have a lot of money down to buy a house right now.
Chad, it makes me think about our grandparents. I mean, your grandparents and my grandparents. When I was a child, I used to see one of my granddads, and he will have the coins somewhere stored. We actually found out that Chad's grandmother will also keep gold somewhere. And
Yeah.
now, as grown-ups, we're like, oh man. But they didn't transfer the knowledge, right? Maybe they thought that was like inherited, and they didn't think, or they didn't know that it was good for them to share that knowledge with us as grandchildren. Hey, I had this gold coin, and share that information. But now we've understand the power and of knowledge, and having gold coins, or gold and silver and other precious metals, right?
Yes. So I want to ask is, does anybody have any questions about what I shared, or what are some of your guys' now, after you see this, what are some of your guys' thoughts about this, and what things that you used to think about gold, or you think about gold now?
Anyone actually purchase gold?
No,
Yeah.
but I do have a question. I would like to know about how much should you have in your portfolio, being diversified, 5% of your money, or how much should you have in precious metals, would you suggest?
Yeah, for us, we like to be around 10% is what we want to have. I would like to have more, but we're not millionaires, so 10% is like for us, that's comfortable for us. I mean, I actually, after I did all this chart and research, I want to have more now, because now I'm really looking at like, oh my goodness.
Data takes all the emotion out of the decision, right? Sometimes we're like, should I put on a savings account? Well, right now it's making 3%, but when you look at data, then data makes the decision easier.
Mm-hmm.
Dawn, you have a question?
Yeah, I do. Okay, so my dad used to get a lot of gold and silver and stuff. But my question to you is now, because I know there's times he'd buy it and then it'd go down and then he'd, get more. And then, so it was kind of like this. That's the way I always saw it. So I never saw it that important, because it was kind of some uncertainty with it. But the other thing is that where do you, like if I were to buy, say $100,000 or $10,000 in gold, all
Yeah.
right, so where do I store it? Where does it go? What,
So
what do I
good,
do with it?
Dawn. You are bringing us to our next point.
Okay.
So something that I share with everyone from the first meeting, okay? There's a link on the email that I've been sending that I've called, the link is called Diversify Toolbox Resources. When you click over that link, it's gonna take you to this PDF, to this tool. And this tool we are updating, that's why we shared the link. So if we update it and you click over the link, you'll have the updated version. So on that link, we have information about precious metals, websites or podcasts that we use to learn more about precious metals, and then websites also where you can buy it. And they also talk about where to store the gold, right? So with that, we have right now 3 places. Mike Maloney, I've been, connected to Mike Maloney for over 15 years and listening to the recordings. This guy is always talking about why gold and silver and, United States, but also different countries, what's happening around the world with the economy. Lynette Sang, it's someone that Chad has been following for years as well. So we've now both listened to both to Mike Maloney and Lynette. She has a YouTube channel where she's talking about trading gold, silver, again, all the different precious metals. And then JM Bullion, which is very known here in United States as a company that sells the gold, the precious metals. So with that, let me go first to Mike Maloney. So this is the website, and they will share with you, Dawn, where do they have vaults? They will have vaults, right? And then there's other ways where you could store it also, depending how much you have, right? It's not something that you're gonna be telling everyone, hey, I have X amount of gold hidden underneath my mattress, right? or maybe like we've heard before, people will open up the walls and there's like hidden cash or hidden coins in there, right? That's the reality. That's what people were doing when Chad was mentioning before, that people were hoarding. What is the word, baby? I just came up with my own word.
Hoarding.
That word.
Oh, so I want to say something else real quick. So these 2 sites that we're sharing with you guys, it's not we're not getting paid by these guys or not affiliated. These are where we've actually bought physical gold from them online and they shipped it to our house and it did show up. So these are why we're showing you, because these are the places that we buy gold from because we trust them. I've seen there's a lot of sites. And like when we first started doing this, it was scary because if you say you buy a gold coin, it's $2,000. That's a lot of money to put on a Visa card or bank account and then hope they ship it to you in a couple of weeks. It kind of freaks you out.
And then everyone is waiting on the door. Did it arrive? Did it arrive?
Yeah, I was like, the first time I did this, I'm like, I don't know. I was really worried. I was thinking I'm going to drive to Texas and pick this up because it scared me. But they really do deliver it, and we've not had any problems. We've been doing it for a few years with these companies, so that's why we're sharing them with you guys.
Yeah, so good, honey. And you can even see here that you can do, so those of you that live in United States and use IRA, you can do IRA through gold. You can buy the precious gold here, gold, they have the silver. And then when you click over the different tabs, they will have the resources. They will have the vaults that we were talking about. So there's so many different ways of, keeping your coins or your gold or your precious metals safe. It's
Mhm.
like a super good conversation for you. If you have a partner, if you have a husband and wife, you know, someone that is close to you to have conversations. Like really, if we will go through like a war, when you think about people that were leaving their countries, what they were taking with them was their earrings that were made out of gold, their rings, just putting all the gold on top of them because that was the only thing that they could do. So even gold and silver, this website, they also sell jewelry, which we haven't done. We haven't purchased jewelry from them. JM Bullion, they also have the gold here. So we just wanted to do something quickly with you, right? So let's say 1 ounce of American gold. There's many different golds. So this could become overwhelming super quickly, right? But which coin? Do I buy Canadian coin? Do I buy Grand Balcami gold bar, right? So we've tried to keep it as simple as possible. Simple as possible. So what does that mean? It means for us that live here in United States, it could be getting the best seller, which is your 1 ounce, for example. It could be less than 1 ounce. They have half of an ounce. They have 1/3 of an ounce of the American Gold Eagle. The American Gold Eagle is like very simple. It's been for years and years the same. They might change the year, right? It's kind of like having a coin. Think about it having a dime. Think about it having a quarter. They have the 1/10, 1/4 of an ounce,
Mhm.
and then all the way to half of an ounce, and then the ounce, which I saw it
Right there.
right here. This one is random year, and then here is 2023 1 ounce. So it's almost 2,000. And I do remember that when we were going through the COVID back in 2020, at some point they were actually selling it for over 2,000. I think it maybe 2,100, right? I think we
Yeah,
actually,
so one thing, so you guys know, there's a premium that you pay. So right now, the price per ounce of gold, the actual spot price of gold is like $1,854
right
an
here.
ounce, or
It's right here.
1836. Now
Mhm.
you look at this below and you're like, why are they charging me $1,998 for gold if it's only because the dealers like the JM Bullions or the gold and silver, they charge a premium. This is how they make money. They sell the gold to you for a
Mhm.
premium and they keep that money. And then when you sell it back to them, they don't give you the $1,900 when you sell it back to them. They probably give you they give you the spot price is what happens. So this is how they make their money is by the premium. All the dealers do it this way. But you could take your gold coins if you need to. You could go to like local pawn shops and stuff, and they will give you spot price for it. They won't try to, well, they might try to talk you down, but literally you could get spot price for a lot of gold dealers in the areas where you guys live. It's just a standard thing. So
And
it's very
also,
liquid.
if you buy more, they will lower the price. It's not a big amount, but they will do that.
Yeah.
Now, I wanted to show you, this is gold, 1955 on gold, silver, JM Bullion, 1983, couple of dollars more. Silver, if you want to start somewhere, and it's like, I don't have $246 to buy, 1/10. You could even start with silver. And silver is like cheaper. Same, they have an American silver coin.
Mm-hmm.
And then that right now, it's $32.15. Going back, silver as 21, the coin itself, $32. So
Yeah.
sometimes it's like, yeah, go ahead, Drew.
So when you say this, when you try to sell it, what's the spot buy? Is that the actual what they're asking then? Is it when you
Yeah.
Right
spot is the
here.
actual the ask price then, right?
The ask price. That's the
Yes.
actual price set by like the FX markets around the world. That's
Okay.
what the gold trading market says gold is worth, the value of gold is today across the world.
So you're paying the premium, which is the money that they make, which they have to do. I get that. So if you try to
Yep.
sell it, or you need to cash it in, you're just gonna get what the asking price is.
Exactly.
And that's the same as a spot cost.
Yep, exactly.
And it's also here showing on my website right here underneath this house.
Uh-huh.
You see that it says live spot prices.
Okay.
So you see, it's like, look, it went $1 up today. So it looks like the stock market. If anyone has seen the stock market, that it goes up and down. Silver went up 12 cents. Platinum went up 117. And then there's another thing, for those of you that have like stocks, that buy stocks, there are some companies that they do precious metals, and you can buy stocks as
In
well.
an ETF, yeah, like in an ETF fund, you know, there's
Yes.
ETF funds that you could buy if you're comfortable doing that, or you have a retirement account where you can't just buy physical metals with, you could buy them through your ETF, you know, the retirement accounts that way. That's another way to be, you know, diverse. You don't have as much control over it. And some of that stuff's, you got to be careful because it could be manipulated.
Sure.
With, you know, the whole, and that's a whole nother thing, the stocks and like shorting and everything. But
Yeah,
anyway,
more
this
like
is just-
talking about silver and precious metals and how
Yeah.
those companies, they do sell like the stocks, so you can acquire also stocks for companies that sell precious metals.
So I got a question. Say you bought it from this company you're talking about right now. Do I have to sell through them as well, or can you go to somebody
Nope.
else?
You could go to local pawn shop and sell it if you want to.
So the spot market is the same no matter what, anywhere.
Doesn't matter where you're at. That's what you're
In
going
the
to
world,
get.
anywhere in the world, it's the same.
Yep.
For
So that's the
gold,
power of it.
that's the
So-
difference, yes.
So you got to remember, don't get hung up on the price of it fluctuate. Like say you buy gold right now for $1,998 1 ounce, and then the spot price is $1,836, and you're not going to go cash that thing in tomorrow. Because if you're going to do that in like a year from now, don't buy the gold, because that's not what this is for. This is like for, you know, 10 years down the road. I mean, that's why I did the chart, so you could see the data, what really happens. It goes up and everything else goes down. So, and I know that's a lot of people's hang up a lot of time, but yeah, but the price, I can't even get what I put in. It's already lost money. No, you didn't lose money because you're not buying it to trade. That if you're going to do that, then you're better off like trading the stocks. If you want to get in and out real quick, just buy the SLV or the GLD index fund, and you could get in and out of it every day and make a little money or something.
Yeah, Shad, I remember first time I started going into having more understanding about this over 15 years ago. I remember silver was like 20 bucks. Back then, I could have purchased 1 coin per month. $20, that would have been, right, like 2 shillings on a month, right? At that 15 years ago. And then, but I didn't do it. I wish I would have done it. And that's when we were like, we don't want to live anymore on I wish I would have done it, right? Because now 15 years later, the coin will have had more value. So even if it's starting with 1 ounce of silver, $30 in 1 month, we were trying to come up with a calculation. So that would be 12 coins. You know, it's like, okay, can I save? Yes. We want you to put some money into savings, right?
Yeah.
But also think about this other opportunity. So where you're not only keeping your money on a fiat. I remember maybe I was in my 20s, I think. So maybe like 20 plus years ago, one day people from Argentina woke up and their dollar went down from $1 to 25 cents. And we know that our history here in America tells us the same thing, right? When the Great Depression, people were just committing suicide. So we're saying that there is a great opportunity for us to be able to manage that risk So maybe in 10 years, maybe 20 years, maybe who knows, even 5 years, because we were looking at Chad's data, right, hon? And you had on
Yeah.
your data that between 2020, because of the COVID, the ounce of gold went from 1,500 to 1,800. So that's over $300 in 3 years. And any
Yeah.
other question? Anyone can jump in. We know it's already 8:01, 9:01, 10:01 for some of you, maybe 7:01 for some. But we do want to address any questions. Anyone else?
I was looking at it.
I have a question.
Yes.
Okay, so say you put this money aside to buy a property. Say this is like 10, 15 years down the road and you have X amount of thousands of dollars. Like
Mhm.
you're probably storing that in a vault, but how do you physically just go cash all that in, or how does that work?
Yeah, you would have to sell it back to an exchange. Like, and here's a good thing. So that's a very good question, because say you like saved up $50,000 in gold. All right. So we know whenever you go buy a property, the banks are like, hey, you got $50,000 cash in your mattress. We're not going to take that. But if you've been buying gold from like an exchange over the last like 10 years or whatever, you have like a record of all that money, where it came from, where you've been storing it. So then you could sell it back to that exchange or another exchange. And then you have something to show the bank, like, here's where I got the gold. This is where I had my money. It's been in gold. I bought it this place. This is the value. It's kind of like if you buy a house, say you buy a house today and the thing goes up in value like double in the next 5 years. Well, now you have double the equity in your house, and the bank will allow you to use that equity to purchase another house with, even though you didn't pay any more for the house or the equity, but you could actually take that equity and use it to put a down payment on another property. Same thing with gold. So that's what you would do with gold. You just sell it back to the exchange, or you go to like a local gold broker or dealer. A lot of these jewelry stores and places like that will buy the gold at spot price, because they'll turn around and resell it to somebody like me and you for the premium to make money off of it. So it's a good way. That's why you always see those signs when you're driving down 30 or around the buy gold, sell gold here, we buy gold. That's why, because they're going to turn around and sell it to the next guy walking in off the street wanting to buy gold.
Gotcha.
Mm-hmm. And remember, you can start with a little bit, even if it's one silver coin for $30. It might be even better than to have all the money on a bank account, just a whole bunch of cash.
Yeah.
We know that $1 was buying us 3 years ago. We could buy the eggs for $1 when we went through COVID. There was so many eggs, and now it costs us $5, $7, $8 for the same. So
I'm also gonna type in the chat. There's this company called Glint that I set up an account with. It's a gold broker. They're in Switzerland. You could buy gold through it's an app. You download the app to your phone, iPhone, Android. You could buy gold through your app, and they'll send you a MasterCard. And when you spin the MasterCard, you could spin the gold on your card. And then if you want delivery of the gold, they'll send it to you. So you could literally put $500 on this card, use it as a debit card, and every time you do it, it'll send you a little notice that you spent like 0.00 ounces on Taco Bell or whatever of gold. So it's another cool way to if you like to have the usability of the gold right now today, you could just download this app and start, every now and I put a little bit of money on the card, just to store it there and it grows. And then if you ever get in a thing where you need to be anywhere in the world and you need to use your gold, it's separate from your bank account. It's not tied to your bank. So say we do something like did in Canada, like a year ago, when they froze everybody's bank accounts because that trucker thing and all that stuff. Well, what would happen if your accounts got frozen and you can't get to your cash? this gives you another alternative. So you could have this as like a backup safety fund, if you you need to get access to money right away, you'll have it on your Glint, app on your phone or debit card that way. Just something else to think about.
There's a lot of information on the toolbox. We put in the links from Lynette Zhang, Mike Maloney, so that then you can continue listening to more. They have a lot of podcasts. Is there anyone else, Hun, that you remember that we didn't add here?
I think those are the main ones that we focus on.
Yeah.
Yeah.
Yeah, because they have like many podcasts throughout the week, so you can listen and learn more. So it's not just coming from us, right? It's
Right.
like you're just learning more about where to store it. They provide so much information about it.
And share with us if you guys find other places that you find valuable, that like Jay, if you go buy gold or something from the local dealer and they give you a good price or something, let us know, because if I could buy it locally and not have to do this online, I would love that. I mean, it's getting harder and harder to find people to buy it from. But that's the gold thing. Now transition on for next week or next month. See, I did it next week. I want to we should, I always want to say next week, but next time we're going to get into, we're actually going to get into all of the real estate part of this. We've been waiting to do this, and we've been kind of trying to build up some, momentum with different things and trying to build, more people been joining. So I know a lot of you guys are really interested in the real estate aspect. So we're going to start diving into this on our next meeting, like how to get started, what are some of the strategies, and that'll be a few sessions because there's a lot to it, but it's fun. It's our most favorite thing that we do. So yeah, Michelle, we can't wait either. This is that's the thing we're super passionate about. But these are all important topics that we go over. So we know we want to share everything that we're doing because it's got us to where we are today.
Yes, it's putting all the eggs on different baskets, right? Not on the same basket, a little bit. So thank you everyone for joining us. Have a good night. And we hope to hear from you. Remember that you can set up an appointment with us and we will gladly meet with you for half an hour, and talk about your specific needs and how can we support you. So thank you. Have a good night.
Guys.
Good night, everyone.
Have a good evening, everyone.
Night. Thanks, you guys.
Good night. Thank
Thank
you.
you for joining.
Thank you.